Hello, everybody. Kirk Spano, Retirement Income Options on Monday, May 16th, 2022. And we're going to talk about a couple of energy stocks that we have been investing in for a while now. And I put out a trade alert on one today. And I just want to start with an announcement. On Thursday morning, I will be appearing on Forex Analytics to talk to Dale Pinkert. He's the gentleman who brought us Shooter. And I think it'll probably be the 7th or 8th time I've been on the show in the last 3 or 4 years. Very first time I was on that show, we talked about oil. And that's been a recurring theme for us over the shows. We've talked about some other things. I have a feeling we're going to go back to oil a lot this Thursday. And the phrase panic pumping is going to start to become a thing. In the meantime, we're going to talk a lot about refining and where the actual money to be made in oil and gas is. There's a idea out there that somehow a lack of exploration is hurting the oil and gas sector. And there is a quote from British Petroleum in one of their recent reports that I posted. Where did I post? Let's see if I actually have it screenshotted. I do not. But I do know that I tweeted it somewhere. It's probably in my profile. I get tired of remembering where I said things. I should probably have a more intelligent system about it. Let's see. Oh, this guy here is funny. This Unreal Elon Musk. I have no idea who he is, but he's really funny. Pretty smart too. Let's see here. I'll find it another time. The point is, BP makes the observation that there is enough oil already discovered in proven reserves, end of 2020. So after the price had already collapsed. But as of the end of 2020, there was 50 years worth of oil already in proven reserves based on how much we use today. So what does that mean? That means that there is absolutely no shortage of oil. And anybody who tries to tell you that there is lying to you or an imbecile. Because if you have 50 years worth of oil that you know how to get to, and at the prices of 2020 were economic to get to, that means get a ton of oil, 50 years worth at today's usage. And what do we know? We know that in 10 to 20 years, we'll be using less oil. So we really probably have 60, 70, 80 years worth of oil that we know where it is. And at today's prices are for sure is economic to get to, but at 2020 prices was economic to get to. So it's not a shortage of oil or hydrocarbons in general that is making the price of oil more expensive. The price of oil is high and the price of gas is high because OPEC, which controls 60 to 70% of those proven reserves, and the official estimate is 70%. I say 60% because they might be lying a little bit. And I think that there's a lot of reserves in America that don't get listed as proven, but if the companies weren't hiding their reserves, it would be even more than what you think it is. One of the reasons that Berkshire Hathaway is going after Occidental Petroleum is because they control a huge conventional, not for fracking, just conventional reserves that are just dribbling out oil and will be dribbling out oil for a very long time. And that oil, if you don't spend money on fracking and you just collect what you can on what's dribbling out for almost free, it's a pretty good profit maker, right? So think about it from Berkshire Hathaway's standpoint. They like to find ways to collect free cash flow. Well, even if they don't produce more oil with Occidental down the road at some point, they stop fracking and they stop spending a lot of money, and they just collect from Occidental what they can from the conventional side. And then they use all those caverns and infrastructure for carbon capture. They have one business basically with no expenses, creating cash flow for them. And they also have another business that's growing because it is going to take a monumental effort over the next 20 years to move to a zero carbon footprint. An Occidental, and Kinder Morgan, and Ametis, and New Fortress Energy are all part of that. So when people tell me that I missed the oil trade, I just call bullshit, because I've told you to invest in Kinder Morgan and Ametis and New Fortress Energy. And these are companies where the upside, because they have a foot in the door on the sustainability side and the carbon capture side, is way higher than the companies that are just E&Ps or oil pipelines. And if you've bought all those companies, like I've suggested that you should, then you have as much in energy as the S&P 500 does, probably a little bit more when you consider the alternative energy companies that I've suggested through PBW and SunPower, Sunrun, Enphase, SolarEdge, all companies we've been in the last few years and probably will be again shortly, given the correction that's going on. So if you want exposure to energy, don't invest in yesterday's energy. Invest in tomorrow's energy, because the price of oil can't really go up too much longer, because either the powers that be will cause a recession for a multitude of reasons if they do it. I'll just say that if the Federal Reserve allows a recession, if Joe Manchin allows a recession, then all the people who say end the Fed and all the politicians are corrupt are probably right. And we'll find out, because this Federal Reserve thing is kind of coming to a head. Either they're doing things the right way for the right reasons, or they are owned by special money, super rich interests that don't give a shit about actually keeping people employed. And they're going to lie about that to supposedly lower inflation, which they won't be able to do because they'll hurt the supply side as much as the demand side. What I think is going to happen is I do think that the Fed's going to back off by around Labor Day, whenever that September meeting is. Because think about this. Yellen, on one hand, says that lowering U.S. tariffs on Chinese goods is worth considering, right, to help with the supply side. And then over here, Goldman Sachs calculates that the worst case recession forecast, they forecast their their base case, and then they give a what if scenario for recession. Why is Yellen, Goldman Sachs, out of one side of their mouth talking about, oh, we need to keep this from getting too bad? But then over at the Fed, they're talking tough on rates and quantitative tightening. It is exactly the reason that I've been telling you for months and months, that the Fed just had to shock the system, let the air out of the bubble in equities. And now you're getting a little bit of follow through from the panickers, from the know-nothings, from the flunkies, from the trend traders who just want to push it as far as they can. And then over here, you find a thread, and this guy actually responds to me once in a while. This is the guy who posted something, and Elon Musk responded to him, trust the shrub. It's pretty funny. Well, this guy is saying there's probably a short-term bounce in Chinese equities coming. It's one reason you could buy EMQQ as a trade. I'm not doing it, but you could. But some smart guy here. Remember what I said the other day? What was the first sign the oil was about to get cheaper? What was it? Does anybody remember? Had to do with Venezuela, right? As soon as the ships start loading for Venezuela with heavy sour, right, and they're an OPEC company that isn't producing as much as they're allowed. What happens to the price of oil as soon as they're producing as much as they're allowed? The United States says to them, if you just drop out of OPEC, we'll help you rebuild your country. Do you think that's something that might happen? If we want to tell Prince MBS, we want to tell Prince MBS to go sit and spin, we just cut a deal with Venezuela that pulls them out of OPEC. Because trying to control the price of oil at this point, it's been relatively successful for a year. It's not going to be successful much longer, because these other countries need to make some money. They can't be beholden to Saudi Arabia and their interest. They have to look out for themselves, and they will. They always do. That's why every time OPEC tried to control the price of oil in the past, somebody broke ranks. OPEC is never able to hold the line very long. Somebody always breaks ranks. Price of oil gets high enough, they're like, ooh, let's sell more. Venezuela is in desperate straits right now. And I would encourage you to think about the last 10 years or longer of policy, United States policy towards Venezuela. Did we really put the screws to them because some of their leaders are evil? I'm not saying some of their, Chavez wasn't idiotic with how he thought things should be run. Was Venezuela ever really a threat to us? Was it ever really worth sanctioning them? Seriously, what threat were they to us? Or was somebody, Dick Cheney, playing the long game, State Department, Department of Energy, Pentagon, because they knew, hey, at some point, Saudi Arabia is going to get a little out of line again. The guys that helped fund the 9/11 terrorists, and we're going to have a way to put screws to them. So I think you should think through how this is all played out over a number of years. This sort of thought process always takes me back to a conversation that I had with a Republican political operative out in Madison, Wisconsin, while I was there for an exact sciences meeting right before that company helped me make my first million. Sat at the bar. A couple people came and went, where I always knew to sit at the bar where the annual meetings are, because you'll meet people. Guy sits down next to me. He orders a whiskey rye old fashioned. Some of you have heard this story, not too many of you probably. And I look at him, I turn my stool, and I say, hey, you're not from around here. Well, I'm not. How would you know that, though? Do I have an accent? Well, not too much. I said, you're either hang out in Washington, D.C. a lot, or maybe California, because you've got one of those trying to hide my accents. He goes, yeah, well, I'm from Buffalo, but I work in Washington, D.C. Oh, okay, what are you in Wisconsin for? Oh, well, I work on Scott Walker's re-election campaign. Oh, wow. And we talked. At one point in the conversation, he found out I was a writer. I found out about the politics. He goes, what do you write? I said, financial analysis. It's not what I want to write, but pays the bills. Because what do you want to write? I said, oh, man, I would like to write novels and historical biographies and things like that. He goes, yeah, what would you want to write about? I said, man, if I could be a fly on the wall for every room that Dick Cheney has ever been in, that's what I want. So for those of you who have seen Hamilton in the last several years, right, being in the room, I want to be in the room where it happened. And he turned his stool to me when I mentioned Dick Cheney. He says, you know what? I have known Dick Cheney for 40 years. He goes, that is the guy that you want to know because he knows almost everything. And even with all the bad press he gets, he's probably one of America's greatest patriots, even if you don't agree with some of the things he's done. Now, I'm not saying that's true. I'm just telling you what the perspective is on A, his role, but B, more importantly, to my point, things he knew and the things that go on in the U.S. government. So the U.S. government plays a very long game, and there is a bit of a deep state. There's no doubt about it. But I don't think that's necessarily a bad thing in most cases, except where we overstep. And for those of you who don't know who John Perkins is, and I'm not so sure that he has a presence on Twitter. Oh, yeah. Oh, I'm going to follow him. So John Perkins wrote a book called Confessions of an Economic Hitman. I read that when it came out, within a year of it coming out. Read that book. Read Confessions of an Economic Hitman. In fact, I will put out a list of things. I'm gonna do that book list tonight. I'm gonna do 2 book lists, a financial one and a other stuff one, a macro one. Confessions of an Economic Hitman is a book on macro economics and the workings of the U.S. government that you really should read, because as altruistic, forward-looking, pro-freedom, pro-economic development, and pro-pulling people out of poverty that our policy is and our actions are, there's no doubt that profiteering and some really bad shit has slipped in. Think about Chevron and some of the things that they've done around the world that polluted rivers and streams where people had to drink from. Cancer clusters straight downstream from places that U.S. oil companies and chemical companies have been. Outside the United States and inside the United States. Right? It's a big, big web. So when we talk about oil, talk about energy, there's a lot of moving parts. There's a lot of people with very, very vested interests. And greed colors motivations and actions and narratives and a lot of times outcomes. So as an investor, what we can do is try to figure out what's really going on. What we can do is we can follow the money. So when I suggest a company like a Metis and I get arguments about it for people who don't know anything about the company. I had one kid tell me last night, because I told some of my poker buddies, I said, look, I'm making this a big position. I'm putting 6 figures of my own money into this company. Kid says, well, it's just biofuels. Biofuels have been around a long time. I said, well, go read some of the things I've put out there and consider that the last 2 stocks I gave you for free were Ford and SunPower when they were both single digits. And I'm telling you that I'm putting more money into this one. But no, I mean, there's a reaction. They're not profitable right now. People who don't read shit about what's really going on telling me, who reads nonstop, the way things are. I bring that up because if you're not buying a Metis, when it goes up 3 times and 5 times and maybe 10 and 20 times, and you try to tell me that I didn't give you great stock picks, I'm just going to tell you, hey, I'm worth 10 million now because of those stock picks, because that's what's going to happen. I have no doubt in my mind this basket of stocks that I've been guiding you into for the last year is going to make several of you, if not several dozen maybe, into millionaires. I mean, I don't know where you're starting. And some of the retired folks who are already worth 6 and 7 figures, you're going to get a hunk of growth that in a few years, you're going to be able to say, wow, I have a lot of money I can give away now. Or I never have to worry about my retirement again. Or both. These small companies and mid-sized companies that are on the right side of the future, all you have to do is not let these periods of volatility, and I think this period of volatility is just the Fed letting some of the air out of the bubble and massaging time, because what do we know about time? What does time do? Time fixes all things, or you die. That's how time works. So if we're short on the supply side right now, and that's partially been manipulated through the oil market, and whether China manipulated it or not through their zero COVID policy, supply chains have been disrupted because of COVID, whether it's an accident or on purpose or a combination or an oversight or overreaction, whatever caused it, whatever the real reasons are China has done what it's done, doesn't matter. They can't afford to do it much longer. China actually made an announcement yesterday, was it like overnight, that they're going to try to bring everything back to normal this summer. Wow. So that means we better buy on this dip pretty hard, because more time will have gone by, and Venezuela will start putting oil on ships. Some other country out there, maybe 2 or 3 or 4, are going to say, boy, we better sell some more oil while the price is pretty good, and before the car companies start selling almost nothing but EVs in 2027. Again, that's the year when it's almost all over the world. It's going to be EVs for sale. We know that the amount of lithium coming to the market by 2025 is going to be roughly triple. Silicon is easy to get. Intel is going to be built out by then. Hydrogen is going to be closer to being used in fleets for heavy machinery, or heavy transportation. So this little patch that we have here is just a transition. And you better be looking for things to buy, because the end of the world never lasts real long. If there ever is really an end of the world, again, who the hell cares? It's over. So when Bill Ackman runs around saying that World War III has already started, or this guy that I heard, one of our subscribers and I consult with, actually I manage some of his money, sent me an interview from kind of what would it be? There's a demographer out there, a couple of them. Neil Howe. There's kind of an opposite to Neil Howe guy out there. They basically come at things from the same direction on demographics. You've heard me talk about demographics a lot. Well, this guy is basically saying that technology and our ability to overcome challenges are going to lose this time, and that cities will become death traps. There'll be shortages of everything everywhere. Here's the problem with that. Even with wheat and all the other food supplies at multi-year lows, still more than we need if we distribute it well. Do you remember victory gardens? How hard would it be to do what we did 15 years ago during the financial crisis? What did George W. Bush say? Plant a garden. Do you remember that? It's not really that hard to fix things. When you take a look at the percentages that are out of whack, the numbers are fractional, maybe 1 or 2% off from what they were 2019, 18, 17. It's really small at the margin stuff. What have you heard me say a million times? Where's money made? At the margin. Anybody notice that the price of AT&T went up today? Why'd that happen? What did I tell you they were going to do a year and 2 years ago when the time was right? They were going to raise fees. They're going to raise rates. And with only 4 major companies in telecom, only 3 of them have most of the business. Verizon and AT&T both raised rates at the same time. Coincidence? So during this period of inflation where certain rates go up, certain things go up in price, what's going to happen to those fees at AT&T and Verizon when their capex drops a little bit and inflation drops a little bit on some of the things that they have to spend money on? You think those fees are going to come down? No. They basically just did a permanent price increase for a temporary price problem. You have to think about things in the variant of time. And if you have a hard time with that, go watch seasons 1 and 2 of Picard, Star Trek Picard, on Paramount Plus. another stock that we own, because there's time travel. And you don't have to wrap your head too much around time travel. But if you just think about all the things that we know are going to happen on the supply side the next 4 or 5 years, that should make you feel a lot better about what's going on with inflation this year, because it's temporary. The demographics and technology-driven slow growth forever scenario for the global economy, which I've been talking about for over a decade, has not changed. This is a blip. When you take a look at the long-term charts, this is all going to be a blip, just a blip. Somebody has another good chart up here that I'll put into an article. But it shows that wherever this correction stops, unless it breaks through that megaphone line that I've showed you before, we're probably just going to resume the bull market late this year or next year. And we are going to get a hell of a rally in the presidential election. Typical presidential cycle stuff. If you go back and read my quarterly reports and my annual letters, you'll see that I predicted all this, that the worst years of the Biden administration would be the first couple in the economy and the stock market, but really more of the stock market, because they had to prick the bubble. They don't want to see a financial crisis because things get over leveraged and everything breaks. And they pre-planned for it this time by having extra money on the side for the repo market, which they've already used as of last week, right? Didn't even take till September. Something broke last week, something driven by the crypto market, probably that stable coin. And the Fed was buying treasuries. Sounds an awful lot like QE, doesn't it? We're not going to suddenly go illiquid. This is all just about biding time, getting the supply side back in line, introducing some alternatives on the oil side, moving the shells around. But there is a real problem in fuel. There is a shortage of refining capacity all of a sudden. Why? Because during the COVID crash, about 1.5 million barrels per day of refining capacity were taken offline permanently. And I said it at the time, bad idea to be closing refineries. That's going to cause a problem at some point. But you can understand why they did it, is they knew, as they all know, as all those executives at the refining companies and oil and gas companies know, is that we're at the peak oil plateau right now. We're at the point where oil demand is cresting and getting ready to turn over, because they know the year when the mileage requirements change, become so strict that you really can't sell ICE vehicles anymore at the passenger level. You have to reserve that mileage, that low mileage, for the commercial stuff. So all the passenger vehicles are going to go EV and hybrid starting when? In 2027. That's when Ford has announced that they'll do it in Europe, 2030 for the United States. GM is at 2030 and 2035, but closing in on Ford. Just go through all the list of car companies, and they're pretty much all between 2027 and 2035 EV and hybrid, all of them. And more of them on the short side of that than the long side. It's 2022 already, folks. And at some point, this Build Back Better is going to happen. It's going to have incentives to buy EVs. I really want to buy a car right now, but there's not that many of them out there. They're expensive. As soon as Intel and Taiwan Semiconductor, they're building here too, And Texas Instruments, they're all building. All these semiconductor companies are adding capacity in the United States. As soon as that's all built out, and it'll come in phases, 2023 and 2024 and 2025 and 2026, all of a sudden, the shortage of semiconductors will be gone, which is why I tell you to be very careful with shortages, because they always bring new supply. You may want to invest in the new supply, but not the competitors of that new supply, right? You only want to invest in the companies that are going to add new revenues, not suffer margin contraction. That's why I'm investing in Intel, but not a lot of the other semiconductor companies. Going to trade the heck out of them, though, because people aren't going to understand things that they have never understood, which is that high prices bring more supply. It's a pretty simple economic concept, and yet it gets ignored over and over and over again because, oh my God, look, it's going up. I got to buy it. FOMO, FOMO, FOMO. And they ignore over here the oil companies that I'm trying to tell you about. Let me show you a sign that people are starting to notice. Metis had an article written on it about 2 weeks ago. It's a crummy article, but it was an article nonetheless. It was over a year since the last one. You know what that means? Is I don't get the extra $20. And anytime there's no article written for 90 days, you get an extra like $20. I think sometimes it's 30. So some of the people selling or writing articles for beer money, which you should ignore most of them. They said, oh, nobody's written about this for a year. So I'm going to write an article about Metis and throw it up here. It's going to be the real deal. You'll get it first. I'll send it to the public side about a week after that. But with the Metis at 749, well, that means my orders probably just triggered because my orders were in at 750. I really encourage you to listen to this earnings call and think it through based on what I just told you, how things move, how they work, follow the money, and take a look at all the things that are really going on here. Okay. Phase 2 of the biogas production, JetBlue. There's other contracts in here. If you just change it, Ametis, jet fuel contracts, right? Just go right on through. You just keep on finding the United, Qantas, right? American Airlines, Japan Airlines. Here's the Qantas one. You start saying, well, how can they do that? There's a shortage of refining. Well, Ametis is one of the only companies that's adding refining capacity in California. They're going to own the San Francisco airport. Everybody needs jet fuel there is going to get it from them. So these people are real close to getting smoked, the shorts. They've been forcing it down because the story on Ametis isn't out there right now. Do you know when that story is going to get out? In the next 10 days. Do you know how I know that? Do you know how I know that? Because it's going to be me. I'm going to write an article on Seeking Alpha that gets read by between 50 and 100,000 people. And I'm going to be on Forex Analytics, and it's going to be my hot stock pick. And I'm going to be doing the Money Show next month, and it's going to be my stock pick there. And on Substack and on a Medium, 250,000 people are going to find out about Ametis from me in the next month. Some of them are going to buy it. And what's really going to happen, because I've seen it happen before, there's a number of analysts out there who pay attention to me. And 1 or 2 or 3 or 4 or 5 of them are going to pick up the idea. Sometime this year, the stock is going to turn back up. I don't pound the table often. But when I do, I think most of you who have been around a little while have learned to pay attention. I'm not taking a lot of risk here. And that's kind of the whole point. I'm not taking a lot of risk here. I'm embracing the volatility. And maybe I have a higher threshold for volatility than a lot of you. You know, I played in a poker tournament on, was it Saturday night? Yeah, it was Saturday night. I won a poker tournament. And I was dead last in chips with 19 people left. I won the tournament. Sometimes you just know that your cards are that good. Or in that particular case, I had some good table draws, so I knew I was the best player on the table until the final table. And at that point, cards kind of went my way. The final table, half the table's as good as you. It doesn't matter where you are. You're lucky if you find a bad player on a final table. But that saying that I've given you before, embrace the variance, embrace the volatility, embrace the beta. The narrative out there right now is to look for stocks that are low beta. Bullshit. Hold cash and look for the spots to buy the high beta stocks. Why are these people investing in stocks that go down slower? Oh, I'm investing in stocks that are going down slower than some of the other stocks. Well, shit, if it's going down, just get out. That is one of the greatest lessons I've ever learned, is that no amount of hedging, unless you're just going to gamble and speculate and hopefully get lucky, ever works. And losing is losing. So I've pushed you for 6 months or longer now to keep accumulating cash. And last week I said, hey, there's a little trade on the long side here maybe. And it looks like it all happened on Friday, right? I mean, ARK was up 10% on Friday. So every single one of you should have been up around 10% on ARK for a hot minute. Do you trade it? Do you hold it? It's up to you. I did a little trimming, but I still mainly own it. Just brought my cost basis down a little bit with a little trimming. You know, the Metis here on the oil side, you need to embrace this volatility because this here is also jet fuel. The short interest, as soon as there's a little volume to the long side, the stock's going to rock. I don't know if it takes till the fall or end of the year. I suspect it happens between now and the next quarter. They just had their quarterly earnings, and they are in that time period with high capex. The Iraq heads are running around saying, oh, they're not profitable. They're not profitable. Well, of course they're not. They're building a bunch of shit. And when it's built, and all those contracts I just showed you are pumping in money and all the new contracts, then the carbon capture kicks in, and then the tax credits kick in. These guys are going to have $5 billion of revenue in a few years. Easy $5 billion. That's the conservative projection. They have it all on their website. You go straight there. You just see what the CFO is saying. It's got a market cap of under 300 million right now. I can't fathom that this company isn't a 10-bagger. I really can't. 2 to 3 billion market cap. I think that is one of the surer things I've seen in a long time. Now, can it go to 5, 10 billion? Maybe. We'll see what happens with India, and that's pretty bullish too. Could there be another leg down? Maybe, for a hot minute. Then maybe I make it a triple position. I've just been kind of mentioning this one at the edges for a while, right? I am to the point now where I am so sure about this company, and I am so looking at a Christmas present or whatever holiday you celebrate, birthday present. How about that? This is a gift. This is a gift down here. Could it get to 4? Yeah, maybe for a minute, whatever. If that's how you're looking at it, oh, could it go down a little bit more? You're not looking at it the right way. With any company, learn about the company. That's when you write checks that matter. Another company here, I've told you to read industry papers, industry magazines. Fast LNG from New Fortress Energy in the Gulf of Mexico, right? But not just there, also in the Netherlands. We already know they're in the Caribbean. Already know they're going to Qatar, somewhere in the Middle East. This fast LNG technology that they have, where they can basically build an LNG plant right on the water, is revolutionary. In an era where we need to wipe out coal for climate change reasons and limit the impact of OPEC, these guys are in a sweet spot. The guy that put together this idea is a billionaire already, and he's going to become an even richer billionaire, and he's not going to care about spending money on making the Bucks better next year and getting one of his business partners' kids into the U.S. Senate. You ever wanted to be part of something where the people are so connected that it can't go wrong, where you put the fix on your side? This is it. New Fortress Energy is also it. I mean, I think Ametis is probably going to make more because it's starting at a lower number, but you can't get much better hooked up than New Fortress Energy is. The people, the technology, the connections, the money, hard to do. So you ought to have a full position in Ametis, in my opinion. So 3%, just 3% in stock. Then if you want to sell puts, right, and some of you should already have puts, and I'm not going to roll those out. I'm just going to let them put it to me. You know, I'm going to have on my $12.50 puts a net cost of $9.50, and on my $15 puts for July, I'm going to get a net cost of $10.50. 11. I got $4 for those. So you need to have a position in this. Now, if you're uncomfortable with a double position, then fine, go ahead and roll out your options. I don't even think that you need to do a diagonal, right? You remember what a diagonal is? If you own the $12.50 Julys, you could roll them out to November and get more money. Now, a lot of times you do a diagonal and you come down here and you try to lower your strike price. I don't think you have to do the diagonal because I think time is going to fix things. You can just collect more premium and keep rolling it up, keep rolling it out until you don't get it put to you. If you're trying to not have it get put to you, I want it to get put to me. I want 6 or 7% of my portfolio in Ametis, and I am looking for a way to get more New Fortress. The dang thing just won't come down. So I sold the $35 puts, and it's above 35, so I'm probably not going to get that. And there's some $35 covered calls that I have out there that I have to roll out. So I don't want it called away. What I'm really, really hoping is that for a hot minute, this stock gets down under 35. Just for a minute. I just need to get under 35 for a minute, and I can fix all my trades. I can buy stock. I can roll out my puts, roll out my covered calls, do a diagonal, lower the strike price, or raise the strike price in this case, right? Lower for puts, raise for calls. So in any case, I want you to focus on Ametis and New Fortress Energy, Kinder Morgan, PBW, Solar Edge, the retirement income options that I'll write tonight when I get back from the doctor. Got my every other year go to the doctor and get told I'm fat. And this time I'm going to agree with him because my extra large shirts are getting a little snug, and I don't like that at all. I actually cleaned out my closet this weekend. I was so frustrated. I got rid of all the larges. I was like, okay, someday I'll get back down to a regular large, and I'm just going to buy new t-shirts. I like new t-shirts. That's one of my things. You see me when I play poker. I wear pretty cool t-shirts. So yes, we need to focus on energy. The other thing we want to take a look at, and I will include this, if you take a look at the charts on the copper, the metals companies, industrial metals, they've come way down, right? 30%. And they're in a support zone. So we have to figure out, are we going to get the end of the world? And are we afraid of that? Or do we think there's another big leg up in industrial metals? I would like to get I would like to get Freeport-McMoRan in the low 20s. I think there's a way to do it with puts. I think what we're going to do is August, speculating that July, August is the bottom of the market. We can probably sell some of these puts down here at 30, maybe get $3 or $4 for them, on a down day, get them and get these put to us. So I'm looking at these August puts and I'm trying to figure out where do I want to be. And this big open interest here at 30 probably means that it's not going to get much below that. We take a look at FCX on the max pain. pull it down to August. My guess is this is going to be right around 30. Oh, max pain is 42 right now. It'll drift this way. It's going to be upper 30s. So at this point, with the price of Freeport-McMoRan at 35, it's already starting to become bullish because the max pain would move it to the right? So you're always going to move towards max pain at some point during the expiration cycle. So we can get way down here, this strike price, probably the August 30s, and we get a few bucks for that. It probably doesn't get put to us because we'd have to get lucky for it to get put to us, but we could simultaneously maybe buy the stock in the low 30s, and then that premium pulls our cost basis down a little bit. If we somehow got Freeport-McMoRan between 20 and 25, that's one of those gift wrap things. Somebody asks about Azure, another one of our energy companies, this one in India. I don't care if there's another leg down. I guess that's where I'd have to put it. I know that there's pressure to get the price towards 1750 in July. That's what this means. That's the price that it's getting pushed towards. So if the price is 10, 11, 12, which is where it is now, it's going to get pushed towards 1750. If the price were 30, it would get pushed towards 1750. That's what max pain means. It's the market looking for equilibrium based on the contracts that are out there. So there's a lot of things lining up for upward price pressure, but there's a lot of panic. There's a lot of madness of crowds that could get you that next leg down. That's why you scale in a little now. And then if, Armageddon zombie apocalypse happens and then you shove all in. So is there some loss that you could take right now in the short term? Yep. Is that loss that would be permanent? Probably not, unless you sell at the bottom because you panic. But you scale in, you try to get the lowest cost basis possible, realizing that you will never get the lowest, right? That's why I had on the webinar last week, right? What was the webinar cover last week? Oh, wrong one. The webinar cover last week. To hire the best. Oh, I hate these guys. I just want to see the cover, man. Well, whatever. Perfection is not attainable, but if we chase perfection, we can catch excellence, right? Vince Lombardi. So we want to get as close as we can. Yeah, I'll take a look at MP materials too and resources, that stuff. The right side of the investment barbell. All right. Let's call it a day. I gotta find myself an Uber to get to the doctor because my car is also at the doctor, the car doctor. I thought this was interesting. I had a conversation with somebody about this. This has to do with difference between tech and energy. All these charts you're seeing, they indicate that energy is going to start crushing tech. They're all horseshit. Why? Because there's old energy and there's new energy. The old energy is not going to do anything special. The new energy is, hence Ametis, New Fortress, carbon capture stuff at Kinder Morgan, all the alternative energies, all the stuff that's related to EV batteries. They base these charts off of XLE. This is one of those. That's one of the three components that they put in here. The XLE. They already got their rally. There's only 10 oil companies in the whole world worth investing in. Saudi Arabia, Saudi Aramco is the best one, but I would never invest in them. All of these charts, if you take a look at what they're using as the components of these charts, very talk your book stuff. Very talk your book stuff. And somebody actually makes some good points. Lithium, copper, right? It's not the oil that's going to be a big deal. It's the other stuff. All right. Have a good day. I will get some articles out tonight when I get back. Take care.